Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald and you're watching Sydney Direct. As the Aussie dollar Kiwi dollar continues to hit record lows, I spoke to Brun at OptionsXpress to discuss speculation that this pair could be set to reach parity. Ben, lovely seeing you as always. Thank you so much for taking the time to chat with us today.
Absolute pleasure, Natalie.
Okay, so we're talking Aussie dollar, Kiwi dollar today, which has continued to fall to record lows, really. What are the drivers that we're seeing at present for this cross performance?
Well, fundamentally, the interest rate differential's really going in New Zealand's favour at the moment. They raised rates four times last year, to take it from 2.5% to 3.5%, where here in Australia, we've cut interest rates again, so we're at 2.25%. So really, the Aussie probably deserves to fall a lot more than what it has so far. So basically, as it stands at the moment, it just seems that New Zealand's economy overall is in a stronger place than Australia. That's obviously leveraged a lot more to the Chinese story, but both are sort of a global risk sentiment currency overall. It'll just be interesting to see which way it breaks, because recently the Reserve Bank of New Zealand in the last monetary policy meeting basically said everyone was expecting the rates were going to go up again, but they said, and this is incredible, it could go one of three ways. They said that could be on hold, it could go up, or it could go down. We're very open-minded at this stage. So there's a little bit of uncertainty, but overall the trend for the Aussie versus the Kiwi is still to the downside.
So it's pretty much roll a dice on that policy then. Which way are you rolling then, with the bears on a potential move to parity, or do you favour a shift perhaps even lower?
I think it is definitely heading to parity, and probably sooner rather than later. And parity doesn't mean anything. I mean, you've got these things in the markets called a parity party when it gets there. It really means nothing. It's just a psychological barrier. There might be some resistance just prior to breaking through parity, but generally once it makes up its mind in terms of a direction, there's nothing that stops it. Technical factors aside, maybe some support and resistance things. But if it goes to parity, I'm fairly confident that it's probably headed a little bit lower.
How is the diverging outlook then on these two economies playing out on this cross? As we mentioned, the RBNZ appears to be a little bit more willing than its Australian counterpart to act on macroprudential measures.
They really do. That's understating the fact, I think. Actually, New Zealand have taken some action where it's been pretty much a talk fest here in Australia in terms of macroprudential tools that they can use. And I think it's all to do with taking the heat out of the housing market, which obviously in Australia and New Zealand with low interest rates, we're seeing a resurgent or a rampant property sector overall. So now New Zealand, they've got a loan to valuation ratio requirement that they have in use in terms of a macroprudential tool. And there's potential for other things they can do. They can make banks hold more capital. They can put a lot more onus in terms of the lender to sort of put obligations on them paying back the debt. There's a lot of other things that they're talking about and they can do. As I said, here in Australia, it's basically been talked about, but not a lot of action. In the meantime, international property investors are loving Australia at the moment, and whether it's a bubble or not, I mean, you can never tell. You can only tell with the benefit of hindsight. But interesting that New Zealand is definitely going down that road. Australia, well, we're thinking about it. Maybe one of these days.
We're talking about it, maybe it'll happen. Okay, to throw sort of a slight curveball at you then, what is the US dollar story sort of having an impact on here also, with the traders sort of seeming to be favouring selling off the Aussie dollar versus the greenback a little bit more so than the Kiwi?
Yes, they've been doing that quite aggressively. I mean, just to think of it, almost in the blink of an eye, we've gone down from parity with the US dollar. Now we find ourselves at 78 US cents, something like that. And it's just happened so suddenly. And a lot of the predictions are fairly dire for the Aussie. I mean, as I said, we're very much leveraged to the Chinese story here. But of course, on the other side is what's happening in the US, and they're predicting that we're going to see some interest rate rises. Now, this is where the guessing game starts. It could be June, it could be September, it depends on inflation, macro events, the global economy. I mean, there's a lot of moving parts, but we've got Janet Yellen's testimony to Congress coming up. That might give us some insight, some clues. This is next week. But yeah, the Aussie dollar has been a little bit of a whipping boy when it comes versus the US dollar, but emerging markets currencies have been as well, and we sort of get lumped into that space. I mean, the Kiwi's fallen as well versus the US dollar. Pretty much everything denominated against the US dollar has fallen on the idea that rates are going up. at some stage in 2015, ... watch this space.
Ben, always a pleasure catching up with you. Many thanks for your insights today.
Thanks, Natalie.
For all of the latest in currency news and FX analysis, do stay tuned to Dukascopy TV. For now, though, it's goodbye.